let's switch back to financials now, which Tiffany raised a moment ago. The investment committee closely watching bank stocks today in anticipation of potential dividend and buyback boosts following the Fed's stress test last week. Let's bring in Pete Najarian on the phone with a look at what the options market is saying about the banks. And Pete, I note that you own some of the banks outright in their shares, and you have options on several others. Go ahead.
Yeah, absolutely, Tyler. So, yeah, presently I own shares in Wells Fargo. I own them in Capital One. I own them in Bank of America. But on top of that, I also own calls because of all the unusual option activity that we have been seeing. And by the way, this does go back to late October, very early November. And the XLF is a great example of what really stood out for us, which has been 39 separate times, Tyler, we have had bullish option activity in the XLF. It's been absolutely gigantic paper consistently coming in there. I'll even give you a great example today. Now, the financials have pulled back slightly over the month of June, and you take a look, and all of a sudden I see 43,000 of the July 23rd expiring 37.5 calls. So in other words, right out of the money calls, giving themselves a full month for this to pan out, and they're a 30-cent option. So this is the kind of thing we've seen time and time again, and we've seen a lot of option activity, not just in the U.S. banks, but I'm looking at Barclays, I'm looking at Deutsche Bank, I've got a Brazilian bank, ITUB, Bank of America, of course, which is low, U.S. J.P. Morgan's another one. Those are all the different types of exposures that I've seen. But if anything stands out right now, in the month of June, the amount of option paper that we have seen in Wells Fargo has just been absolutely off the charts. It seems like almost a daily basis. Matter of fact, just in the last week and a half or so, we had buyers of 10,000 of last week's expiring calls. They turned out very nicely. We had two different separate times a week and a half ago where we had those June 25 expiring calls being bought. But then it stretches even further. Last week, 15,000 of the August 45s, 8,500 of the July 46s, 17,000 of the July 46s. So it gives you sort of the sense of where the big option paper has been flowing, and it's been coming back into the banks very rapidly on this pullback. So I, of course, am trying to position myself as much as I can possibly into that type of thing. And whether or not they're buybacks or dividends, I know Kevin O'Leary really does lean towards the dividends because of a lot of different reasons. Makes some sense to me. But in either case, it is very, very bullish, I think, for the banks going forward.
Bullish for the banks. Joe, you're in, thanks, Pete, and stay on with us here. Joe, you're in Goldman Sachs and Morgan Stanley, but you think the buybacks and the capital returns are already priced into these shares. Then I'll turn to Tiffany and get your thoughts because you came into this area first this afternoon. Go ahead, Joe.
I do suspect that they are priced in, but I also suspect that Pete could be onto something here with a lot of the traditional money center banks like a Wells Fargo, a J.P. Morgan. I'll throw in USB as well. These are the franchises that on the other side here of receiving these results could see a very strong positive lift, because there has been such a negative headwind that's been emanating from the flattening of the yield curve and from rates. So I agree with Pete on that. I do have a question with Pete in terms of some of the more capital market financial institutions, like I own a Morgan Stanley or a Goldman Sachs. The expectation, and Tyler, we've got earnings coming here in just a couple of weeks. True. You listened to Jamie Dimon a couple of weeks ago. He talked about a very poor trading environment. Pete, are you seeing anything in the capital marketplace to reflect some of the negative sentiment surrounding the trading revenue expectations that are not very positive right now?
Yeah, that sounds almost crazy for me, quite honestly, Joe, to be honest with you. I mean, what we have seen has been a record year again for the derivatives markets, at least. And so the trading involved in that specific area, and I know there's much more to trading than just that. But when you look at the derivatives markets, Joe, and you and I talk about this kind of thing when we're talking on the phone or whatever, the volumes are absolutely extraordinary. We traded 40 million plus contracts again yesterday. A couple of years ago, it would be a monster day to trade 20 million contracts, a monster day. And now here we are on a consistent basis trading anywhere between 35 million and 50 million contracts per day. So from what I am seeing, the trading, at least by volume perspective, is absolutely still very explosive and on a record pace once again.